I don't think any of us can play the voice of God and the market will choose. So if the market wants cheaper, less decentralization, faster, those trade-offs the market will take. And we can yell from the sidelines saying, how dare you do this? And we sound like gold investors.
Sure.
We have to be really careful on imposing our wish versus what the market chooses. Because if not, we get left behind often by sticking to a prior narrative. I think what I do love about this space is there are people focused on specifics. So spreading the core philosophy of Bitcoin, if they can get network adoption of their narrative, fantastic. It's good for everybody. So it's kind of, it's more fluid, I think, than people want it to be. So my view on Bitcoin kind of remains what it always was, which was, and I coined this a while ago, is I think of it as the kind of perfect collateral layer of this new digital economy, because it's pristine collateral in the way that it can't be debased. You know, if you think of how, let's say, a treasury bond works, it's kind of weird because when everybody needs treasury bonds, the Fed creates more of them. So your collateral is actually worth less over time, which is the debasement of money idea. Now, you can't do that with Bitcoin. So if Bitcoin is your base layer of collateral, then what you get is an ability to get paid for people wanting collateral in a collateral squeeze, which is what the financial system needs at its base. But it became obvious to me that Bitcoin doesn't solve every problem. It solves certain problems really well, and others it doesn't solve as well. So that was really my evolution. And then as the space broadened out, you realized, okay, this is an incredibly deep, fast-moving space with so many applications that it doesn't make sense to be all on one blockchain. Different blockchains will specialize in different things. So that's basically my Bitcoin hypothesis. Yeah, and I think the point being is they're two entirely different things. I think we probably violently agree with each other. And I think that makes sense. It depends what kind of adoption we're looking for within it. If we're looking for nation states, corporate balance sheets and others, then stuff like Ethereum doesn't make sense because it's not trying to be money, it's trying to do other things. But base layer of money, yes, I mean, it works at that kind of sovereign state level, corporate level, a supranational entity level. Predictability itself does not necessarily generate superior returns. I mean, and so that's how I look at the ecosystem. I look at network adoption. Now, whether that's Ethereum or Solana or NFTs or any part of the ecosystem, and use that as my guide, because what I'm trying to do here is capitalize on participating in a technological revolution. Some of that is money, and that can be separated out. I can just own some Bitcoin. But like we do with US treasuries, we don't own them all the time, because there are times when you want to go out the risk curve and times when you want to come further closer to the risk curve. So that's kind of how I think of it. It's time horizon that matters the most. So Shiba Inu might outperform over periods of risk where it becomes a meme and then it disappears, or it becomes less significant in value. Doge, let's see how that changes as Tesla starts to accept it, Mark Cuban starts to accept it. Who knows? Can they build the other side of the network effects? That's possible. But I think over time, these things will be proven out and where they fit in the ecosystem. And Ethereum's network adoption has been faster than Bitcoin recently. So we've seen that growth. Will that play out in the next 5 years? No clue. But our job really is to find that. Having a philosophy doesn't really help you as an investor. However, I also believe that, because every time I've seen people with an anti-Fed philosophy or an anti-this or a pro-that, they always get killed. There is a difference in this space because the technology is integrated with the network itself. So people can be philosophical builders on this network because they want to build a better future. And that's great. And I completely encourage that. Mm-hmm. But don't criticize somebody else for not sharing this philosophy, and that if you don't, then you're a heathen. That smacks to me of religion, and that shouldn't come into investing. So the macro environment is, I think, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. So the narrative was the inflation shift. The inflation shift last year, I think what happened is inflation was real and inflation destroyed marginal spending and marginal investing. And I think we've seen it in meme stocks. We've seen it across the market. We've seen it in cryptocurrencies where the marginal investor got marginalized because they didn't have enough money. So I think that was one of the features of what happened. And the bond market was pricing in some more inflation, but not a great deal. However, that narrative is shifting. All the forward-looking indicators I look at look like both growth and inflation are slow much faster than the market expects. So then they're struggling to think, how do we price growth equities? How do we price other types of equities in that shifting environment? Because we're going to have a period of time where growth is slowing and inflation is going to look high, and then inflation follows because inflation lags. So I think we're at a shift. My general view, and I've held this for a while now, is that the central banks are more likely to get away with one hike, two hikes max, before they're looking at stimulative measures again. Because I don't think the economy has got traction, and we don't know what the true traction is of the economy until maybe 2 years, 3 years after the pandemic recession has followed through. That's very typical of every recession I've ever followed, is basically there is a growth slowdown that comes fast afterwards. The market panics, starts talking about recession again. Usually that doesn't happen. There's generally more stimulus. So I think it's very supportive of crypto prices overall,